Good morning. Today is May 4th, 2023, 8:20 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook is Get Ready. I am starting to look for a correction of at least 5 to 10% soon. Now, the FOMC has come and gone and out of the way and was kind of muted as far as FOMC days go. Now, there is an event taking place today that has the potential to be just as big as the FOMC announcement. Apple's earnings is today after the close. The reason why Apple's earnings are so important is that Apple is in every portfolio. It makes up over 7% of the S&P 500 by itself, which is the largest single holding by percentage. It makes up almost 25% of the tech sector by itself. So, a week ago when I said that the tech sector, or look for the tech sector to lead us down from here, I can just as easily say Apple could lead us down from here. Now, I've been saying that earnings numbers mean something, but what is more important is guidance. Apple hasn't given guidance since the start of COVID-19 pandemic, citing uncertainty. So let's take a look at the numbers and come to our own conclusions. Okay, I brought Apple up under the Analyze and Fundamentals tab. First thing we're going to look at is revenue. Revenue is down from a 3-year average of 14.868 to the current of 2.355. That's not good. Net income is down from a 5-year average of 15.597 to a negative 5.3543. That definitely isn't good. Earnings per share are down from 22.895 to a negative 2.2828. Now, I definitely didn't get any good, warm or fuzzy feelings about the fundamentals behind Apple. Let's take a look at the technical side of Apple. Now, Apple as a whole is overbought on the weekly and daily time frames. This is the daily I have here, and on the RSI, where it's one of the measures I would use, and based on trading sideways in this level, to me, this is overbought. I can't wait until it hits above the 70 area right now, because we've been trading in this area for quite some time. So this to me says overbought. There are definitely other measures that I look at that would tell me overbought as well. Looking at it from a stochastics point of view, it would definitely be overbought on the daily and way overbought on the weekly. That's not the look that I want. Now, here on the weekly chart, we're definitely approaching the overbought area. However, the MACD still has positive momentum. And this is what gives me pause to why when I say I'm starting to look for a 5 to 10% correction, and all I can say is soon, it's because we're dealing with these larger time frames like the weekly. And it's really hard to narrow something down on the weekly time frame. We could be like at best within 2 weeks to a month of this happening. But again, it's really hard to narrow something down on the weekly because of the principle called variance. So when it comes to today, I expect Apple to fall and find support around the 163 to 162 area before pushing up on the day. Now, Friday will be a tug-of-war between the overall market and Apple, with the overall market winning briefly. Apple's earnings could, in my opinion, weaken the entire market overnight. However, because so much of the market is already oversold, there will be plenty of places for money to go as they pick up the rest of the market. Apple will be picked up because of arbitrage. Friday's opening will probably be a nice size gap down. If so, we will have Apple to thank for it. There may be so many people waiting around to buy the dip that we eventually go bullish on the week. I do have a bullish bias for the week. But this isn't the end, it's just the beginning. A lot of traders will be shaken to the point of a lot of them will not want to hold anything long over the weekend. Not just because of Apple, but primarily because of the regional banking crisis. This could leave the door open for a Black Monday type of an event. My clue for this kicking off will be a blow-off top type event happening Friday afternoon. Think about this, adding to the fact that Apple will topple the market, is when these events take place, a lot of stocks will already be down. If you have lost 60% on stock A, B, and C, and Apple is still up over 28% year to date, where else can you go to sell something to get liquidity from? Let that sink in for a minute. That means a lot of people will be coming to sell Apple to take money and run. Now, today has potential to get wild because we are already outside of the market maker's expected move. So we are on the verge of what could become really crazy sell side activity. And just as well, on the opposite side, we could have one of those huge bursts that catch fire to the upside. This brings us to the key levels of the day. Let me bring those up. All right, here we are back with the key levels of the day. Starting on the support side, we have our Jack support at the 407, 406 area. This is an area of support. Will it hold through the day? Is hard to say. Our queen support is going to be the 405 to the 404 area. Then we have our king support 403 to the 402 area. One of the targets that I have on the day for the downside could quite possibly be the 404 area. This is where one of my targets lie, where we can kind of hit and reverse, or this is where we wind up at the end of the day. But I do expect us to find support and get a nice bounce today at some point. Will it be the 407, 406 area or the 405, 404 area? We have to see what internals do after the open. On the resistance side, we have our jack resistance at the 408 to the 409 area. Then we have our queen resistance 410 to the 411 area. This is one of my targets for the upside today, this queen resistance area. We hit there, best believe I'm looking to re-up on some shorts from this area. Then we have our king resistance area 412 to the 413 area. Now, the main thesis for today is bearish on the SPY, closing below the 408.2 with a projected target low of between 408 and 403. The alternate thesis is bullish, closing above the 408.02 with a projected target high of between 409 and 411. I'll come back to this because we have opposing biases in the futures market. So this is kind of what makes me lean toward the futures. When the futures have a bullish bias, I tend to go with the futures because there are more data points to prove so. The main channel we're in is between 397 and 416. Now yesterday, market strength and breadth open gap up and began falling immediately, finding support around 11 a.m., which was the halfway point in the opening gap, then reaching back up to the open, or where strength and breadth open, around the time or just before the FOMC announcement. And then once the announcement was made and the conference began, or the Q&A portion began, we also began falling back down, and we fell to a point where it almost filled that morning gap. Almost, but not quite. So I expect strength to open weak and reversing at some point in the morning, maybe right at the open or late morning, before looking to roll over again at some point late in the day. We do have dissonance between the technical side, which is bullish, and the quant side, which is bearish on the SPY. However, the futures have a bullish bias for the day, with harmony between the technical side, which is bullish, and the quant side, which is bullish. So this will have me looking to get long intraday at some point. This brings us to the scenarios of the day. Alright, here we are with the most probable scenario of the day is going to be our expanded range day structure. We could get morning support finally bouncing off of support levels to a decent degree, making it a decent size rally, but not getting too far because there's going to be a draw with us around this market makers expected move. So don't get too excited. getting back to the weekly market makers expected move, because we could end up chopping around this most of the day if we don't get a decent sized bounce up above it to the 410, 411 area before coming back to it. So that's our expanded range day structure. All right, our next scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area. More so the jack and queen resistance area is where we'll find that midday chop today, preferably right around the weekly market makers expected moves lower edge. We'll find that midday chop, and then the second part of the day will go back down with the same amount of force or energy that we came up with the first part of the day. That's the primary scenario on our rounded reversal day type structure. However, I do want you to be on alert for our vice versa alert. And that is where we get a decent pop before the opening, and we kind of get this reversal going into the cash open, where we come down, we get that continued push lower toward the jack and queen support area, and then we find our midday chop. However, today there is a possibility, since we are outside the lower edge of the market makers expected move, that we could have some weird activity go on where we could begin this midday chop, and instead of a midday chop, it becomes a midday drop. That midday drop could see us sinking deeper and deeper, and then finally we reach a high tier support that's from the daily around that 403 area, and begin to pop back up. That would be a scenario or our vice versa alert on the rounded reversal day type structure. One thing I do want to say is that this could be another way as well. We could have a midday pop, which sees a large spike up as well, and then trying to roll over later in the day, which will carry over into the overnight session. So that is our rounded reversal day type structure and the vice versa alert. All right, our last scenario is going to be our trend day down day type structure. We could open gap down and start with a pushback toward the previous close, represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area. Now, a key thing to watch for today is going to be a failed trend day. And a failed trend day happens once we reach our target. And remember, I have a target down here of the 404 area, somewhere around that 404 area. So we could reach that 404 area and then immediately get a reversal headed sharply back up. So that is going to be something to keep an eye on our trend day model today. So again, I hope this helps. I said something yesterday that looms really large and really important in times like these, and it's that you must understand your risk. Not just the risk that you have on in a specific position, but understanding the market conditions and what's at risk. Because right now, you can have a thorough idea of your risk, but right now, the market is so volatile that margin could increase. And this is not something that they really, like it's really going to pop up to you. But the way that margin works, it's ever expanding. And I covered this some months ago about how margin works and how you always need to trade with a third of your account, keeping the other 2/3 open and active for margin increases. And this is the times where we get those margin increases for those of you trading on margin. So it's very important that you kind of keep an eye on that and don't max your account out, because you could get that margin call and still be looking at your account thinking that you have plenty of money left in your account, but it's the expanded margin that they're looking out and looking into the future and saying, okay, this is too volatile, we need to close this position before you wind up upside down. So you have to keep that in mind. And again, as I always say, the most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on, not just in the positions that we're taking, but also in the current market conditions. Again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.